Hey, what's up, guys? It's Corey here with Dapper Dollars, and today we're going to talk about the bearish case behind Aemetis and some bullish factors that might play into this as well. You ready? Let's get started. So, this channel is all about using the online income opportunities like merch by Amazon, Etsy, and things like that to build income for ourselves online and invest this income in things like the stock market and real estate to build our wealth and provide financial freedom for ourselves and our family. If that sounds like something you're interested in, like and subscribe, and let's get started. So, Aemetis has been on a pretty great tear. I'm up over 200 something percent in my portfolio. This has been an amazing thing for me because what Aemetis does is produce renewable natural gas by getting the methane runoff from dairy farms, pig farms, wood deposits, and other biomass areas, and they get the methane from these places and convert it to renewable natural gas, which can be used the same as natural gas gotten from fracking now. But there are some major factors that we need to talk about because it is not all roses, and there are some big hurdles that are going to determine whether or not this is all just for naught and the stock is going to go to zero in the future. I feel like you need to have this information accessible to you, and you might not do it, or you might not look at this stuff up on your own, or you might not know where to look to see if this is actually a good investment. So I did the research for you. I'm going to bring the case before you today of my bearish thesis on Aemetis and then give you my thoughts afterwards. So let's get into that. But before we start all this, I've taken the time to write a book that details how I built income online from merch by Amazon and Etsy, and also how I structure my investing process. So if you're an investor looking to make more money and have more money for investing, this book is for you because it gives you every step of the way how to do everything, and it is a resource that is going to grow in the future. And if you are someone who is watching this because you're making money online, it gives you the opportunity to see how I do my investing and how I structure it to grow my stock market wealth. Now, I've grown it from, 2,300 to 8,800 in the last few months. And it is definitely not been by luck, but it has been by the tactics that I follow in that book. So it's available to you in the description below. It's going to be $5 until the end of the month. And after that, it's going to go up in price. Now, this is also going to go up in price as I add information to it. If you take the time to buy it now, you're going to get it for the future. What that means is that anytime I come out with an iteration of this book in the future, which is definitely going to happen, you're going to get the renewed iteration for free, and you only have to pay $5 once. But the price, like I said, is going to go up in the future, so it's going to be $10 later, maybe $20, maybe $30, and all of the iterations are going to be given to you for free in the future if you buy in now, but in the future it will cost more to buy in. So anyway, a little bit of a plug for something that I've done. It's taken me a long time to finish, but I'm making it available to you for $5 right now until the end of the month if you'd like to check that out. So anyway, that's out of the way. Let's talk about Aemetis and what the bearish case is that faces Aemetis for the company moving forward. So Aemetis, like we said, is a renewable natural gas company, and there are definitely some issues that they are going to be facing down in 2021, probably until 2040. Now, those main things are infrastructure, price, and the availability / supply of their product. So let's talk about this. Now, the infrastructure is a major key for Aemetis because if you don't know anything about natural gas and how natural gas is transported, it requires pipelines. If you go to places like Houston, Texas, or certain places in California, you'll see that there are definitely the industrial zones and the energy plants and stuff like that where natural gas is processed. And from there, it is an underground pipeline to get to places like the gas stations or homes or processing plants or the places for distribution. Now, Aemetis does not have those in place right now. What they're going to have to do is work to get this infrastructure built out. That is going to cost jobs in the future, and it is going to be something that is not exactly cheap for them to do. But we have seen from Aemetis last year at the end of 2020 that they were going to partner with PG&E, which is a California natural gas company. And PG&E is definitely the company that gets natural gas to the biggest population of California. So if Aemetis is able to tie their operation into PG&E's pipeline, that means that they don't have to do anything else and build out their own structure. But this is a definite issue because they don't have their own infrastructure right now without tying into PG&E. So right now they could just be creating renewable natural gas just for nothing. So that is definitely a consideration. And it's just one of those things where it is a infrastructure reality. They can create as much of this product as they want, but if they have no way to distribute it to gas stations, homes, buildings, or anything like that, then it is all for naught. So that is the infrastructure issue facing Aemetis. Now let's talk about the price. This is where people say money talks, because if something costs more, businesses are not likely to spend more on a product just for the novelty of renewable natural gas. And that is definitely the issue that is facing Aemetis and all renewable natural gas companies. Because right now, renewable natural gas is anywhere from $7 to $20 per BTU compared to natural fossil fuels, which are anywhere from $2 to $3 per BTU. That is double the amount. And if you get up to the 20s, that is an insanely more costly product. And it just doesn't make sense to use this product. You could have the availability of renewable natural gas at gas stations, but if you have gas that is $2 a gallon like it is here in Louisiana, or if you go to the same gas station and you have the opportunity for renewable natural gas and it's $7 to $20 a gallon, I'm not sure how many people are going to prioritize the environment to pay $7 to $20 over just paying $2 a gallon. So that is the issue that is also facing Aemetis, and this comes from the fact that there is not much infrastructure in place to make it happen and deliverable, and they just don't have the capacity to produce that much. And so you have a refined supply and the demand is so big, it's going to drive the price of this product up. And now that is the last part of the thing that is facing Aemetis down and all renewable natural gas in the future. The supply of renewable natural gas is probably 10% of what it needs to be to actually meet the needs that they're suggesting. Because Aemetis definitely they've started the work on the phase 1 biofuel construction plant. And that's where they're going to create biofuels for jets, trucks, cars, any sort of renewable natural gas like that. And what they're going to do, or what they're proposing that they're going to do, is that they're going to provide 25 million gallons per year of renewable natural gas and biofuels. And that sounds great. That sounds like a lot until you realize that the airplanes alone, the jets that they're hoping to fuel, use around, I think, 50 billion gallons, no, not 50 billion. They use 17 billion gallons, not 17. Wait, yeah. Airline industry uses, looking at my notes, 17 billion gallons per year. And the trucking industry uses 34 to 54 billion gallons per year. And Aemetis is only looking to make 25 million gallons per year. Now, this is just from one refinery, or in the future, obviously, if they create more, then it's going to be a higher production value and they're going to be able to create more in the future. But right now, you look at producing 25 million to meet the need of, like a combined 50 billion, if not like 75 billion barrels, or 75 billion gallons per year. That is not a very good outlook for Aemetis as far as actually meeting the need and being able to drive the cost down, because like we said before, if you're able to at least match in price and the renewable natural gas option is there, then you'll probably choose renewable natural gas. But if they're not able to make that much, they have to charge more for it. So that means that the renewable natural gas prices are likely going to be higher. So Aemetis needs to do what they can to get the production up, build more of these facilities, and actually make the productions scale up to actually meet the need that is a real need for the country. Make the needs for a real need. Anyway, you know what I'm saying. The country has a real need of 75 billion gallons per year, and Aemetis is only making 25 million gallons per year. So there's a pretty big gap there that they have to make up. And again, Aemetis is not the only company doing this, but it is a significant portion of what is going to be available out there. So with all of this said, and Aemetis definitely not looking that great for a casual investor who doesn't want to risk much, Yes, it is a cheap stock, but you now see that there is a decent risk to this stock. However, there is an upside, and that is why I'm still invested and why I will likely continue to invest. Number one, the government is fully backing companies like Aemetis for the renewable natural gas future. And if the government is backing it, that means that there is going to be funding and job creation, because what just happened? Biden decided to cancel the Keystone Pipeline. That is, I think, 25,000 people out of work. So these people are all going to be displaced or have to find other work. Now, these people were in, I think, the northeast, northwest, or northeast, or general north, and Aemetis is in California. So if there were some sort of incentive in there to build other plants or build plants in different areas, that would be a great thing for Aemetis. And the government would likely be responsible for giving Aemetis the grants to build a facility, replacing what was lost in Keystone, and giving some people their jobs back to build that plant. And then, of course, maintain it in the future. So that is one thing that we have going for us as far as investing in Aemetis, is that the government has definitely fully backed the idea of going green and building out the renewable natural gas sector. However, we don't know what that's going to look like, but we do know that it is possible for Aemetis to increase what they're doing as far as production and build more plants, which is going to build more jobs. And obviously the infrastructure would need to be built out as well, so that there's more jobs that would need to be created in the future. And like we just said, Biden cut off about 20-something thousand jobs, so it kind of makes sense to give a little bit of hope to those people who lost their jobs and live up to his promises of creating new green jobs for people in the future. So this would be a great avenue for the government to take if they wanted to do that. And there is the cultural reward of people who are going to be buying renewable natural gas. Now, there are going to be people who just adopt renewable natural gas, they bite the bullet and they can afford to do it. And they might just have it as a tax write-off to say, hey, I'm a my company is run on renewable natural gas. It's a great selling point to customers. It's a great tax write-off in the future. So there are definitely going to be people who are buying stuff from Aemetis, the renewable natural gas. However, it's not going to be as many as if you can get it to the production values that we talked about. So there are going to be people who decide to buy it, but it is definitely not going to be as much as if when we can get the production ramped up to what it needs to be to match what is currently there for the fossil fuel industry. So this is the bearish and somewhat bullish case for Aemetis. I am not a financial advisor. Consult your professional financial advisor. I am just a guy on YouTube. If you make any decisions regarding your money, make sure to talk to a professional financial advisor. This is just my opinion. Everything I said before this and everything I'm going to say after this is just my opinion on this channel. I do hope that it helps you, though. I hope that you now have a bigger and better grasp of what Aemetis is, the challenges that face them, and the benefits that they stand to get if they actually meet these challenges and are able to accomplish getting renewable natural gas into the hands of most of the people around the US, because it is going to be a great thing if they're able to do it. It's going to be an extremely profitable option, and it is going to eventually phase out fossil fuels, which is going to be somewhat better for the environment, depending on where you stand on that. So anyway, I hope you enjoyed this video. I hope that you are having a great week and you have a great weekend. And remember, guys, someone is going to do something amazing every day. Why not you? See ya.